Good morning, good afternoon, good evening, and welcome to our 331st weekly webcast. Now, I have a special guest with us today. I'm very, very excited. I've got Brian Harte from Harte Global Financial. He's a great guy, a good friend as well. To learn more about him, you can always go to LinkedIn. He started his company, I think was it back in last year or the year before?
It was last year, April.
April of last year.
Yep.
Okay, awesome. He's also a graduate from my program. So what I thought we'd do today is, in addition to all the questions you type, of which I'll answer all of them, if you want, you can ask Brian questions as well. Not about what stocks to buy, but what it's like working in private wealth management, which is the sector he works in. Now, I humbly believe that private wealth management is the best job you can get in finance. And the reason is, it's the only job where you can start at a big firm and then leave and take your clients with you. And the catalyst for this sector is that in the next couple of decades, it's sad to say, but you're going to see the biggest generational transfer of wealth in history. So if anybody has questions for Brian along the way, please let me know. And Brian actually, he knows that my favorite comic growing up was Wolverine. And he's got a great network. And so he had the guy that made the Wolverine books with Frank Miller create this for me with a nice note on the back that says, to Chris Haroun, thank you for teaching Brian how to make money. Thank you so much for that. So I appreciate this. Awesome. And for those of you that have kids that want to learn how to invest, he's also a best-selling author. He wrote this book, Oliver and Felix, Frugal Adventure. So you can search for Oliver and Felix Frugal Adventure on Amazon to support him. So yeah, if you guys have any questions at all for Brian, he's here to answer your questions as well. Let me kick it off with this. A lot of my students, a lot of my clients want to work in the financial services sector, and they want to work in private wealth management. How do you get started? Like, how do you get that job?
Well, first you have to decide, do you want to work for a small company or a larger company? I feel that it's a little bit easier to get started on the smaller side of things. They're more likely to hire you and give you a chance to talk to you. It's easier to get in, especially with AI reading resumes nowadays today. The smaller companies tend to still do everything face-to-face when you come in. So that's an easy way to get in. So that way you can get your licenses from the Series 7 to Series 63. And if you decide you would prefer to work at a Goldman Sachs, Morgan Stanley, at least you have your licenses, then you become more valuable. And I would even recommend at a smaller firm work on getting your Series 24 so you have management skills as well. Right. That'll put you in a higher position at JP Morgan or anywhere else it goes into. But for me, I started small, and then I liked it. I like only having 20, 30 people around me at all time. It just felt more like a family. Where if you work at Goldman Sachs, it's so massive, you kind of get lost in the herd of everything. But there's things that make it easier at Goldman Sachs. You have the name recognition, which is a big deal, especially when you're trying to build your book of business. JP Morgan, people tend to respond to you faster and easier when you have those names as opposed to someone no one's heard of. Yeah. So, but you have to decide for yourself. Everyone's different. It's like, should I live in New York City or should I live in a small town in New Jersey outside of New York City? Some people thrive in Manhattan. Some people thrive in the suburban areas. So you just have to be honest with yourself when getting into it.
That's awesome. And one thing I'll say also is when you work at a firm like Goldman Sachs doing private wealth management, you're kind of biased because there's a bias to sell their products. Whereas if you work at a smaller firm or your own firm, and it should be everybody's goal to start their own company one day like Brian did, then you're not biased. You can sell anything you want for the most part.
Yeah, that is a big difference because the choices you make are really based off the client you're speaking to individually, and you're making your own decisions. So you have to do your own research. The downside is you do have to do your own research. You're not going to have a whole team of analysts. You're not going to have expensive Bloomberg terminals thrown at you. You're going to have to be able to learn how to do it with a lot less. But you tend to focus more on what you understand the best, and that helps out a lot.
Cool. Awesome. All right. Next question I've got here is, what makes a good mutual fund? Is having less AUM, meaning assets under management, a good factor? So I'll answer this, and if you want to add some thoughts, please do. So I think mutual funds are a scam. And the reason I say that is because mutual funds have very high fees. it's not uncommon for a mutual fund with hidden fees to be as high as 5%, plus you pay more in taxes. I would rather that you all buy ETFs instead. ETF, the fees, instead of being 3 to 5%, often can be 0.05% or 0.03% for ticker VOO, for example. So you might ask, why the hell do people buy mutual funds at all? Well, one of the reasons is because mutual funds have really, really deep long-term relationships with companies, HR departments in companies as well for 401ks and retirement savings programs. Another reason is because they spend billions on lobbying government officials, and they spend a lot of money on advertising. Why? Because they collect 300 to 500 basis points. They can spend a lot of money on advertising. Now, if you want to do your own investment research on ETFs, what you can do is you go to ETFDB, that's etfdatabase.com, and then you can pick your ETFs here. Did I spell that right? Let me do it again. ETF. I had a senior moment there, Brian. The older I get, the better I was. Yeah. So you can go to etfdb.com. Yeah. See right there. Right? Yeah. And then you can do screening. You can look at geographies. You can look at issuer types, etc., blockchain, whatever ETFs you want. And what you want to always look for is you want to make sure two things are correct after you do your due diligence on an ETF. Number one, you want to make sure that the fees are low. And my favorite ETF company, do your own research, my favorite ETF company is Vanguard. And this is where I put my money when I'm not sure where to put it. I put it in the S&P 500, ticker VOO. Now, what I love about this is that the fees are very, very low. The expense ratio is 0.03%. And what that means is you're only paying 3 pennies per $100 you invest every single year. Another thing you got to look closely at, please, whenever you invest in stocks, anything, is the average volume. And you never want to own more than 10% of the average daily trading volume. So this one trades 7 million shares per day. Obviously, I can't buy 10% of that, but you never want to own more than 700,000 shares of that. And the reason I say that is because when the market pulls back, and it will eventually, I promise you, big time, it always does, but illiquid stocks own you in a down market. So you got to be really, really careful with that. Okay.
And what I could add to mutual funds too, that a lot of people don't understand is the mutual fund companies will reach out to people like myself and they'll offer kickbacks. So you're actually just getting the mutual funds that we're getting the largest kickbacks from that are being offered to you, to where ETFs eliminate all that factor that's going into it. So your 401ks, the CEO and that company is getting somewhat of a kickback for offering those type of funds that are in your 401k. If you ever ask, why does my 401k only offer this? It's because those offer the highest kickbacks generally.
Okay, awesome. Awesome. All right, great. So let me go through some questions here. And if you want to add anything, please go for it, of course. All right, so Malcolm wrote, good morning, Chris. God is good. I agree. I would like to get into a finance job, but I don't know exactly what I want to do. I like helping others and find reading a company's balance sheet interesting. Yeah. So what I would do is this. So when I was younger, I didn't know what I wanted to do. And so I set up lots of informational meetings with people that worked in different industries and just ask them what a day in the life is like. And it's really easy to do. Go to LinkedIn, do a search, and find people that work in industries you want to work in. And find people with one or two things in common with you, like they went to the same high school, same undergrad as you. Send them a very quick message. It's really simple. The message in LinkedIn, the in-mail is going to be this. For example, John, hope all is well. I also went to the Toronto French School, and I also went to McGill University. 2 things I did. Please let me know if you have time for a coffee or a Zoom call. Thanks a lot. Your future boss. Thanks a lot, Chris. And then during that meeting, what you can do is just kind of network with them. Go on, please.
I was going to say, what helps, depending, I don't know where you live, but if you live in a place like New York, hanging out in the financial district or Park Avenue or Lexington Avenue, because once 5 o'clock comes, everyone's out. You could actually go to the local restaurants and bars and actually see how the people act and respond there. The same thing, whether you're in LA, if you want to work in VC, go to Sand Hill Road. There's restaurants and stuff. So sometimes finding out what you want to do is just meeting the people in that industry. because you might be amazed. You may not like the people in that industry, what you thought, and you may want to choose something else in finance. So if you're lucky enough to live in an area that does have a financial hub, I would recommend just going, being quiet, hanging out, and just people watching and seeing and learning from that way. That's what I did when I first got onto Wall Street. I would go down to Stone Street, which is about a block off of Wall Street, and that's where Jim Cramer got his start and a few other people. And I would sit at bars like Ulysses, and I was just by myself, quiet, just listening how people talk, how they reacted, and that kind of gave me a good sense of where I thought I would fit in.
Smart, actually. I've never thought of that idea. It's brilliant. It's brilliant. One thing I want to say also, don't just focus on how to get a job in a sector. Think about why you want it, why you do these informational meetings. So for me, growing up, I thought I wanted to be a lawyer, and I set up tons of informational meetings with lawyers. And then I realized, this is out there, I thought, are you a jerk before you go to law school, or is that something they teach you? And so I didn't want to be a lawyer because I didn't like the people that I met with. That's right. I also didn't like what they do. So set up lots of informational meetings. Make sure it's something you're very passionate about. And another thing I'll say is this: if you're having issues finding your passion, what I want you to do is this. What I want you to do is I want you to think about this. I'm going to give you 30 days off starting today. You can't travel. You can't go to work. And you can't go to school. What are you going to do with your time? And whatever that is your passion, your purpose, your raison d'être, and that's what you have to do. And if we can humbly help you in any way, find that career and help you transition, let us know. Okay, that's what we're here for. Yeah. Quick housekeeping announcement before we go on. So Brian's in town. It's good to see him. For my annual 3-day networking workshop and graduation event. It's this Saturday, Sunday, Monday. If anybody graduated from my program, I had a couple thousand people graduate over the years. But if anybody graduated from my MBA degree program in the past 2 years and you want to watch the online version of Saturday's webcast, just email support@harounventures.com. We are sold out for in-person though. Thank you. It's a 3-day event. We're going to Napa Valley as well, which will be fun. I rented out Francis Ford Coppola's vineyard. Okay, great. All right.
I have to say I'm most excited about Napa Valley.
Oh, it's going to be awesome. It's going to be fun. It's going to be fun. All right. Give me 1 second. All right. So tell you, we'll move over a little bit here. Okay, great. A little bit closer to me. Yeah, I'm sorry about this. Yeah. And then we're good to go. All right. All right. And it's such a treat to have Brian here as well. Thank you so much, man. I appreciate it.
It's my honor. Thank you.
Excellent. Thank you. Very cool. All right, next question is, what are your thoughts on REITs? I think they can be very volatile, but I feel that exposure to real estate this way is a good thing. Yeah, a couple things. For those of you not familiar with real estate investment trusts, REIT, it's like a mutual fund with a high dividend yield. So by law, they have to pay out about 90% of their profits, roughly, in the form of a dividend. So you get a nice dividend yield. However, don't ever invest in a company just because it has a high dividend yield. If you see a dividend yield of 30%, two things could be wrong there. Number one, it could be a one-off dividend and not sustainable. And number two, the market is saying they might go bankrupt. So always do your research. Now, instead of buying a REIT, I prefer to invest in your primary residence. It's the most important investment you'll ever make. Brian recently bought a house. One of the reasons why it's a great investment is you're going to save a ton of money on rent. And also, depending on where you live in the world, you get massive tax breaks. Now, let me show you the issue with not buying. So I'm going to go over here to Excel Hell, and I'm going to show you very quickly the real estate dashboard here. Okay. So what I want you to do is this. Okay. Enter your monthly rent. So let's say your monthly rent is $2,500. Okay. And let's say that you're going to rent for, let's say, 50 years. So $2,500 a month times 12 months for 50 years is $1.5 million, okay? Now, what's going to happen, and let me actually move Brian and I out of the way. My bad, sorry about that. All right, give me 1 second. No, don't freeze on me. I think it might be freezing. Okay, hold on 1 second, guys. I'm so sorry. Give me 1 second. Check. Okay, good. Here we go. All right, this is important. All right, so let's say you rent $2,500 a month for 50 years. That's going to be $1.5 million you're paying. And so what that means is if you get a 15% return that real estate longer term, I know it sounds like a crazy high number, but hear me out. The reason I say it this way is because you're going to get the ability to deduct interest. There will be appreciation. And if it's an investment retail property, you might be able to actually deduct depreciation. So what that means is that $2,500 a month over 50 years times 12 months, it's actually $344 million. That's what it's going to be worth. And for you finance nerds out there like me, here's the math right here. Take a screen print if you want. And so the best investment you can make is in real estate. Now, what you're seeing here is my real estate investment course, only available on my website. And what I do is I ask you tons of questions about what property you want to buy, how to value it 5 different ways, whatever. And then what you're going to do is you're going to print out a 1-page executive summary based on your research and a business plan. And this is crucial because failing to plan is planning to fail. And I want to be humbly a good steward of your capital. And then Brian, you recently bought a house. And
yes.
Did you
I used the program.
Yeah.
Can we put it back up? Because I'd like to point out
sure.
some things that made a big difference.
Yeah, absolutely.
So I bought my house 2 months ago. So if we go to step 1, and I thought this was extremely important. I did primary residence because it wasn't an investment property. It tells you how much you can and cannot afford. And I think that is key to everything, knowing how much you can afford today when looking for a house. So that way you can kind of eliminate everything else out there. So when you put in your income information, at this part you select your country, the property value to buy, how much your down deposit, and then Chris has it magically pop up how much you're expected to pay each month. The only part I have learned that it is missing is what he can't control are taxes. And there's a section in there you can look up what your tax rates. Taxes do go up every year. But that was the most important part when I was buying a home because I knew exactly what me and my wife Sally could afford to buy, and that's what we stuck to. The other part that I really, really enjoyed and I used a lot was this. It's more further down in the program where I listed the real estate agents I would be using, the real estate lawyers, all this information you learn in the videos that Chris goes over and what each person does and how they do it. But when I decided to sell my house, the house we bought came on the market on a Sunday. We were actually going to add on to our house, and we were looking on Monday to sign a contract. So I had less than 1 day to sell my house, and what I did is I opened up that spreadsheet. I also put developers in there in my neighborhood who have been bulldozing houses,
Right.
and I just turned that on and made a few phone calls. I sold my house without a real estate agent in 2 hours, and I got exactly what I was offering.
Yeah.
And that was enough to get more than 20% down. I actually put down 40% on my house.
Wow.
But that's because I also had a house before that, so that helped out.
Yeah.
But just because I had it all laid out on that Excel spreadsheet, I knew exactly where to look, what to do, and how to do it. And it was brilliant. I absolutely can't say how much easier it was having that information. Now, it did take me about a month to compose all that stuff, researching on Zillow, comparing the houses in your neighborhood.
Yeah.
But the fact that all that information was in there,
Yeah.
I knew what I was getting into.
Awesome.
So it made it so much easier, and I got approved right away.
Awesome. I love it. Now, because you said nice things about my product, this is your cut. Okay. So I'm gonna put this right here. Okay.
That's it. I'm done. I can leave.
All in once. Yeah. Just kidding. All right. Sorry. All right. Let's move on to the next question here. All right. Next question is from Mr. N, who wrote, "You always say to not trade. That's right. And be long-term focused." Yeah. If you're a day trader out there, I say it with love my heart, it's all going to end badly for you. It's like walking into a casino. Yeah. And the reason I say that is because each month has 20 weekdays, meaning 20 days the markets are open. Stocks go up and down for random reasons you can't control, like what Trump might say next, or, I don't know, what might happen in the Middle East, or a company reporting earnings, etc. Be long-term focused.
I would like to add to that.
Sure.
I don't know if people are keeping up with the news, but they're now in negotiations to taking down the $25,000 minimum that you need to day trade, making it zero. So that's in the works with the SEC right now.
Really?
So that means it's going to be easier for people to day trade. It is dangerous. Chris says this all the time, and it's one thing I absolutely agree with. Can you just name one successful day trader that's done it longer than 20 years?
Yeah.
There's nobody.
It's hard. It's hard. And if you, you got to watch out for what are called black swans as well. I recommend everybody read this. I spilled coffee on the book here. So this is written by Nassim Nicholas Taleb, fellow Lebanese person represent. But he talks about random events you just can't forecast. It makes the market move materially. It's hard. It's really hard. Yeah. Now, your follow-up question, fair point. You said, you always say not to trade and be long-term focused, but Jim Simmons, God bless me, passed away recently. Everybody don't smoke, please. Jim Simmons from Renaissance Technologies made $60,000 gross, that's right, every year on average. Short-term trading, also many hedge funds are short-term trade. Yeah, so I would say that Jim Simmons is a one-off. Okay, so if you want to learn more about his company, go to rentech.com, rentech.com. And what Jim Simmons did was he worked for the NSA back in the early 1980s, and he quit to start Renaissance Technologies. And he created thousands of Linux servers running in parallel that pick stocks, right? And so he figured it out with a massive investment on how to pick stocks. And we will never know what is in the algorithm. And if you go to his website, rentech.com, you'll see he doesn't really hire people that know finance. He hires mathematicians. And the way that he does it, we'll never know. But I'll give you a stupid example, and this is so sophomoric, but there's lots of inputs, and then the output is picking a stock. So let's say it rains a lot, way more than usual in a given year. Well, if it rains a lot, people don't go out to lunch or dinner. So restaurant stocks will go down, therefore short restaurant stocks. Yeah, but I would say he's more of a one-off, that's for sure. Yeah. In terms of many hedge funds are short-term focused. Actually, the best performing hedge funds are more longer-term focused. Okay, a lot of people don't know that. But if a lot of firms like the Tiger Cubs, so Julian Robertson kind of invented sort of the industry back in the 1980s and 90s. Tiger, what's his name was a hedge fund. He passed away recently, God bless him. And what came out of Tiger were lots of Tiger Cubs, right? Like Maverick, Viking, etc. And these hedge funds that do extraordinarily well, they make 3-year bets, okay? The day trading stuff will not make you a fortune, right? And when you do investment research on a stock, what I humbly try to do is I try to find what's called a 5x5, meaning a 500% return within 5 years, 5-bagger. Am I wrong? Almost all the time. But if I do my research, I stick with my position. I don't sell it when the market is down. As Warren Buffett said, the New York Stock Exchange is the only store in the world where consumers sell stuff and it goes on sale. But I'm a long-term thinker, okay? And when Warren Buffett buys a stock, like when he bought Coca-Cola back around 1990, which he still owns today, he tells himself, I'm assuming the market's gonna be closed for 10 years. That's how long-term focused he is. So you have to be long-term focused with all of your investments, please. Now, the way to do investment research on stocks, and I provide my clients with every type of template I can possibly think of. So as you can see right here, you do qualitative research, quantitative research, financial research. We teach you all this from scratch. And what comes out of this, and this is dummy data, is a 1-page executive summary and a massive detailed report. Now, you can also use AI as well as your investment research. And so recently, I released a product which is called Forensic Financial Statement using AI. And AI will help you rip apart financial statements, especially the footnotes, which is the most important part of your analysis. And as with all my products, you get a 1-page executive summary behind Brian and I, as well as a massive detailed report that you can print out. Don't let AI replace how you do investment research, but let it help you. And I think that within the next 5 years, it's going to be harder to get a job at an asset management firm as an analyst because AI is going to make it easier for analysts to cover more stocks. Yeah.
Or it'll be a lot less people. The problem with AI, though, is if you don't know what you're looking for, you're going to be guided wrong. You're going to be spitting out information that's incorrect. Yeah. We'll use any stock. Let's just say Apple for the sake of it. If you're looking up Apple and you want to read earnings report statements, if you don't have an understanding of how to read earnings report statements, you won't know what is correct and what's wrong because there's still a lot of wrong information that's being populated. So using the spreadsheets that Chris offers, you're going to know everything about that company. So when you do use AI, you'll be able to spot its inefficiencies and you'll sound a lot more intelligent too.
Yeah, absolutely. That's great. Yeah. And don't fear AI, guys. Okay, I want you to take AI and use it as your secret weapon so you can be way more productive. Okay, and another thing I want to say is for those of you that work in the technology sector, or if you're in university studying technology, meaning programming, computer science, please be careful. Because, Jensen Huang, the brilliant founder and CEO of NVIDIA, said that the worst thing you can do is study programming. And the reason he said that is because AI is the quintessential tool. Big word, nice, Chris.
There you go.
Okay, good. I sounded smart there for a change. Okay, but AI is the best tool for replacing programmers, and I'm seeing it here in the Bay Area. And Brian, who drove to my house this morning, was shocked at how little traffic there was. One of the reasons is because a lot of big tech companies here in the Bay Area are letting thousands of people go, especially entry-level developers. So don't study computer science, please. Yeah. Okay. All right, next question, Ray. Hey, Ray. Ray wrote, how do you follow the RSI of the position you want to fill? Yeah, so RSI stands for Relative Strength Index. The only time I use technical analysis is after I've done fundamental research and valuation research, okay? The RSI is used to help you enter a position or maybe take a little bit of profit as well. So let me show you a very quick example right here. And let's go to, okay, let me pick a random stock right here. Brian, give me a random stock.
Let's do ExxonMobil, XOM.
XOM, okay. Big oil. All right, so let's look here at this stock right here. And I'm going to go to a chart, and I'll look at year to date. Okay. Now, at the bottom here, and this is a dupe, but at the bottom here, you got the RSI. Okay, so what the RSI shows is if a stock is overbought or oversold. So when the reading is close to 70 or 80, you sell if you want to take profits after you do your fundamental valuation-based research. And as you can see, oh my God, look how overbought it was. So you sell. Okay. And the same thing here. Oh my God, look how overbought it is. You sell, right? But I don't want you to do this because look here, like you're going to be wrong a lot of the time. And why try to make, 5 or 10% day trading when you can make more money being a long-term investor? By the same token, if it's oversold right here, right? RSI close to 20 or 30, you buy, okay? After you do your investment research. And I use this to help me know when to take a little bit of profits if a position of mine is way over my 5% threshold. Now, I always have at least 20 stocks in my portfolio, and no stock's allowed to be more than 5%. Okay, so if I own a ticker XOM, which I don't believe in the very, very long run, because I think oil is going to be a bad investment, decades from now. But if it runs up a lot, it might take a little bit of profit. But if I'm starting to put on position, I might start to accumulate right down here. For those of you listening on Spotify, when I say accumulate, that's when the RSI, meaning Relative Strength Index, is 20 or 30. Yeah. And when I put on a position, I immediately, whenever I do investment research on a stock, and I fill out my comprehensive 100-step dashboard, what I do immediately, I don't care where the stock is, I put on 25 basis points, meaning I buy 0.25%. And then I hope the stock gets murdered. I know it's a weird thing to say, but I hope it goes down a lot so I can start to scale it to a full position. And when I managed analysts, when I worked for big hedge funds, what I did was whenever an analyst came up to me and said this, Chris, I have a good idea for an investment, but I need to do more research on it first, but I just kind of want to mention it. I would immediately say, what stock is it? And they might say Netflix or whatever. I'd say, well, I just bought it. It's in the portfolio. I have 25 basis points on it. Do research on it, up or out. And remember, you got to be long-term focused and only invest in stocks where you see, massive upside over 5 to 10 years. Otherwise, just buy the S&P, which is going to get you 15% with no risk on average. And yes, there will be down years for the S&P as well. Yeah.
I'd like to interject. So the
Please
book
do.
Black Swan,
Yeah.
he also wrote another amazing book that people should read, Fooled by Randomness.
Yeah.
And it explains all these different events, how you can't predict it. So when people see Warren Buffett, you can't become Warren Buffett. There was a lot of luck involved over the years to get to where he is. The day traders that you do see from Renaissance Capital, there's a lot of luck that was implied in that you can't recreate. So even mimicking other people's trades is not going to get you the same results that these 1 or 2 people had. So you really do need to understand what you're going for and try to learn as much as possible. And I highly recommend reading his, besides Black Swan, Fooled by Randomness, because it really does explain how we think psychologically and why we do things the way we do and how you can't recreate things from the past. So there's never going to be another Warren Buffett. There'll be somebody else who comes out, they'll do it their own way. They'll figure out it, but it won't be the way Warren Buffett did it. The same with Carlyle Group or BlackRock. They all found their own unique way, and it just seems like you can copy it, but they're also different. So if you're going to do something, you have to figure out yourself what it is that's different to make you in that spot.
Yeah, very, very well put. Very well put. And one of the things about Warren Buffett people don't realize is, yeah, he's a good stock picker. Obviously, he's done great. He'll do better than I'll ever do. But his real genius is this. And this skill I'm about to share with you, if you can master this, you can be a billionaire. His real genius is he takes complicated stuff and explains it in a simplistic way. So you never see Warren Buffett do an interview and then think to yourself, oh my God, I'm confused. In fact, so he went to the same business school as I did, Columbia. And when he came in, he guest lectured to us. He told us that he doesn't have his Columbia master's degree on his wall. What he has on his wall is his certificate of completion from the Dale Carnegie public speaking course that he took when he was 19. I took it when I was 19 as well. That's the only thing we have in common. He's way richer than I'll ever be. But being able to communicate effectively will help you materially in business. It'll help you from a sales perspective, networking perspective, etc. If you think about it, the best entrepreneurs and CEOs and partners in law firms and venture capital firms all have one thing in common: they can sell. And I teach you this in my program as well. And you'll see other, very successful money managers that massively underperform the markets go on CNBC or other moronic channels. That's right. Like Kathy Wood, for example. She's a good communicator. But do you know that you can just put your money in the S&P 500 and outperform, right? So she can communicate. Now, in your business, with clients, et cetera, without disclosing your clients' names and stuff, give me some examples of how you sell.
So each person's different. So I do a lot of background research. So you can use LinkedIn, Facebook, and everything else. So that way I can find some common ground between the person I'm speaking to in advance. And then I'll tend to come up with, like, let me use the book for example. If I know they have kids, I'm going to bring a copy of my children's book and I'll sign it and I'll put their kid's name in it. So whether they do business or not, it's just a form of gratitude, and it tends to open that door so they're more open that way. Planning in advance is everything. One of the things you'll learn in class that I've done is I bring a lot of printouts. So if things go well, then I can hand it to them, and then I pre-write emails. So when I'm done with the meeting, as soon as I walk out the door, they walk out the door, I click send. All the information we discussed is already in that email. They have it, plus they have the hand stuff. I find this helps out a lot. And this is stuff you discussed in semester 1 of your program. And being aware that anything could go wrong at any time, so having backups. So when I'm discussing, especially with new prospects, I have 5 to 10 copies of everything I'm going to hand out. I find out, and I can use this as an example. I'm going to a football game this Sunday with a potential new client. Most likely, whatever we do, something's going to get spilled on it, something's going to get ruined. It's just that we're going to be having a good time.
Yeah.
So if that does happen, I'll have a backup with me and say, you know what, I'm sorry this got ruined here, just re-sign this one, and we're done. That shows people trust that. Yeah. When you have everything pre-planned and figured out, they'll do business with you. But one of my favorite people, like Zig Ziglar, who's a famous person, one of the things in life is...
Is he related to Dirk Diggler from Boogie Nights?
No.
Sorry.
But he's like Jim Rohn and everybody else, one of those speakers. People want to do business with people they like. That is first and foremost. So it doesn't matter. People will throw aside, if you're going to work in wealth management, whether he works in Goldman Sachs or a small firm, if they like you as a person. At the end of the day, people want to do business they feel comfortable with. And that's what you need to do. You need to find some common bounds so you guys can become comfortable with each other.
Yeah, very, very well put. And what I will say also is sports is great boardroom talk. Okay, so I got a job at Citadel, big hedge fund years ago. Well, I humbly did well in the interviews, but at the bottom of my resume, I put interest baseball. And the guy interviewing me was a guy named Carson Levitt. And after we talked about stocks and stuff, we talked a lot about baseball as well. Sports is great boardroom talk. So before you meet with somebody, informational meeting, go to their LinkedIn profile or their Twitter profile, et cetera, or X profile, Instagram profile, and see if they follow athletes. And if so, you can talk about that. For anybody that's a New York Yankees fan, the Yankees are tied with the Blue Jays. I want you to please get off this webcast immediately.
I got to go then. Bye.
Yeah.
I've been following the Yankees for years, many years. So that was the one thing I miss about living in New York City. You could hop on the 6 train and go watch the Yankees play. Yeah. It's absolutely incredible. Yeah. Back in the old days.
I love it. I love it. Yeah. So when the Blue Jays won the World Series 2 years in a row when the Yankees were terrible, that's right, 92 and 93, I finally got to tease my American friends. And I said, hey, you're the American pastime, the World Series. Canadians won it, eh? And my American buddies said, yeah, so what, Haroun? Your Americans beat our Americans. Yeah. So my Americans are going to beat your Americans. Yeah. Okay. All right. Let's move on here. Next question is, I own some CRM shares. That's Salesforce.com, biggest employer in San Francisco, founded by Mark Benioff. Met with him many times. He started the company back in 1999, youngest vice president in the history of Oracle. He's done very well. I own some CRM shares, and I wonder if to get rid of them now or wait for a miracle. Yeah. So what I always recommend doing is before you invest in any stock, what you need to do, okay, is you need to do an investment write-up, okay, and value the company using my valuation methodologies, et cetera. What comes out of this is a one-page executive summary, as I mentioned before, as well as a detailed write-up. Yeah, so I pride myself on teaching my students how to invest. Give someone a fish to eat for a day, teach them how to fish, they'll eat for a lifetime. Yeah, so do the research first, please. And if you see less than 15% upside after you do your research on a yearly basis, don't buy, just buy the S&P. Okay. All right. But I will say Salesforce.com is laying off a lot of people right now. And every single company that goes public, for the most part, they start off as growth investments. They're growing quickly. And then growth slows. And then everybody is like, I don't know if I should own it because it's not growing as fast as I thought it would, but it's not cheap enough yet. So there's two camps of investors, growth investors and value investors. When a company goes public, especially tech stocks, growth investors love it. Then when growth slows, eventually value investors buy it, like Warren Buffett. But the transition between growth to value can take a decade. So it's stuck in investment purgatory. Just be careful. I personally never buy stocks that I think are stuck between growth and value, unless an activist investor like Carl Icahn buys to unlock shareholder value. Yeah. Okay. All right. Next question is, could you open Caterpillar, CAT, ticker, sure, or any other industrial stock and show visually when the past is a good time to buy due to new profit and sales to revenue ratio? Yeah, absolutely. So Caterpillar, ticker CAT. So when you invest in industrial stocks, it's different from other sectors. You want to buy when they're not profitable. What? Right? If you buy it when the PE is like 5 or 6, it's at the peak of the cycle. So how the hell do you analyze a stock like that? Well, you want to look at the historic low in past cycles on a price to revenue basis. So Caterpillar usually trades between 2 and 3 times revenue, okay, price to revenue. But it tends to bottom at around 1 times or below 1 times. It got as low as, I think, 0.7 times revenue back in previous recessions, like 2001, as well as in 2008. So what you're going to do is you're going to look at the market cap historically, okay, divided by the revenue annually as well, and try to buy it when it's closer to 1 times. Right now, I think it's 2.3 or so, something like that. Yeah, I hope that makes sense. All right, next question is, current economic forecasts and indicators suggest a significantly higher likelihood of a recession in 2026 than not. What is your opinion? Yeah, there's a famous quote, I'm going to butcher it, is that economists have successfully predicted 7 of the past 42 recessions, or something like that. Yeah. I have no idea. I don't care. And I say with love in my heart, I don't care because I'm a long-term investor. Like Warren Buffett, when I invest in a stock, I assume the market's going to be closed for at least 10 years. And if you're just joining us, I have Brian Harte here, who's the founder and CEO of Harte Global Financial. He started a very successful private wealth management firm. And if you guys have any questions for him, please let me know. Yeah.
I'd like to bring up something about recessions.
Yeah.
Dale Carnegie had a book. I can't remember if it was How to Win Friends and Influence People, or it was one of those books.
Yeah.
And in the beginning of the book, he talks about a recession during the market crash in 1929.
Yeah.
And he said what he noticed is there's always going to be rich people and there's always going to be poor people. So why are you worried about what the economy looks like right now?
Rich, poor. Okay, go on.
Yes.
Yeah.
So the fact is, cycles are going to come up and down, but there's always going to be a certain amount of wealth that's available to everyone if you want it. You just have to have the courage to go out there and get it.
Awesome. Yeah. Yeah. Just be long-term focused. Always. And I promise you, everybody in this webcast, myself included, we've all sold a stock we love because it went down. Moronic. Okay? And I don't want you guys to focus on the path. I want you to focus on the destination, right? So, for example, I don't know, maybe you owned NVIDIA or some other amazing growth stock in the past, and the market's pulled back, and so you sold. Well, it's ridiculous because if you look at the chart, you sold because it went down a little bit, and now it's up here. And I know I'm oversimplifying it, but you got to be long-term focused, right? And think about it this way. If you're a contrarian in business, you can make a fortune. If you buy the same stock everybody loves, there's not that many shareholders to buy it to push it higher. Okay. My favorite thing is to buy broken stocks, but not broken companies. And what that means, a broken stock, is a stock that's massively oversold for some macroeconomic event that you cannot control. So for example, back in April, a lot of people panic sold, right? My wife, who's way smarter than me, but she wanted to sell a lot of our stocks back in April when Trump was talking about tariffs. And I said, no, this is the best time to buy. And I put my reputation on the line when I say this. The best time to buy everything within reason after you do research is when you see the VIX close to 70 or above 70, which it got to back in April. The VIX also reached 80, ticker VIX, reached 80, an all-time high in Q1 of 2020 when people were freaking out because of COVID. That's the best time to buy. And things were so crazy then that what happened was the price of oil in the futures market went to negative $40. Yeah. So anyway, check out the VIX when you can. And the VIX also spiked to above 70 back in the fall of 2008 when we were within 24 hours, bank machines not working. I've talked about the VIX a lot. I've shown you charts of it before. If you want me to go there again, I can. Thank you. Okay. All right. Next question is it better if this happens to change the structure of your portfolio and move 30% towards companies like Walmart retail stock, Bristol Myers healthcare stock, Exxon energy stock, Accenture where I used to work, IT services, and then T-Mobile telco stock. Well, first of all, let me tell you what I like about that portfolio, not in terms of picking stocks. What I love about that is you got 5 stocks in different sectors. And I always recommend that in your portfolio, you never have more than, first of all, 5% in any one stock, and you never have more than 20% of your portfolio in any one particular sector. That's great diversification. Now, those stocks you mentioned are a little bit more value-based. So if you're worried the economy is going to roll over, yeah, they could be good investments if you do your research. Yeah. But I don't really care where the market goes this year, next year, the year after. You got to be long-term focused. I promise you'll sleep better at night. And I put my reputation on the line, you'll be worth a hell of a lot more in the long run. Yeah.
And ask yourself, if the stock market closed tomorrow and it opened up in 5 years, would I still want to own that company if I couldn't do any trading for the next 5 years?
Yeah. I love that. And along those lines too, whenever I do investment research on a stock, along with the 100 categories I look at, I usually take a step back and ask myself this. In 5 years, is this company going to be more relevant or less relevant than it is today? And that helps you think long term. And it also stops you from being seduced into buying stocks that are cheap. Stocks that are cheap for a reason. Now, in terms of those 5 stocks you mentioned, they're a little bit more value based. If you think personally the economy is rolling over and the market's going to pull back, those are probably good relative investments. And the reason I say that is because the beta of those stocks you listed, the 5, is closer to 1 than a lot of tech stocks that are growth oriented that have betas closer to 2. And I can go into a lot more detail on that if you want me to as well. Thank you. All right. Next question is it true that Buffett's cash is primarily invested in short-term U.S. Treasury bills, providing steady returns while he waits for the right opportunities? Yeah, it's short-term liquid government, highly rated investments. 22% of his portfolio right now is in cash. And so when you invest in government bonds, okay, here's an example. Here's a Treasury bill. Okay, a Treasury bill is short-term focused, right? When people say T-bills. Right, so you'll get whatever the Fed's funds rate is right now, minus a little bit when you invest. Okay, and what you can always do if you're in the United States, I recommend going to TreasuryDirect.gov and buying bonds there as well, because you can invest $10,000 tax-free. Talk to your accountant first. Okay, that's short-term. Long-term bonds, when government issues long-term debt. Okay, this is a real bond from World War II, actually. And this was issued in 1944. Use of proceeds was to destroy the Nazis, obviously. But this was a long-term focused bond. Okay, and this here, if you get dividends from a bond, those are called coupons because you used to clip off the coupons, right? You don't get coupons with treasuries, yeah. But generally speaking, a lot of companies, instead of sitting in cash, what they'll do is they'll buy an instrument that has slightly higher return in the short run, which is treasuries or commercial paper. And that's why on balance sheets quite often you see cash and short-term investments. Yeah.
So I would say the short-term notes, think of it as a discount rate.
Yeah.
So if something's valued at $1,000, you may pay $990. And then the idea is you make the money when it goes to 1,000 par.
Yeah. And the price of bonds is always has an inverse relationship to interest rates because of that discount. Yeah.
And then when I tell clients and other people when I teach them about bonds, I also say look at a swing set, a seesaw. I'm sure everyone's been on a seesaw. As interest rates go up, the price of bonds go down. As the interest rates go down, the price of bonds go up. Yeah. And that simplifies it, but it's amazing how accurate that is.
Yeah, absolutely. And if you want, what you can do is you can buy government bond ETFs after you do your research as well. If you want exposure to governments all over the world, not just U.S. government, because you don't want just U.S. dollar exposure if you live overseas. Yeah. Okay. Next question is: apart from the S&P 500, ticker VOO, which I own, what other ETFs do you think have a good chance to do very well in the future? Yeah. Always go to etfdb.com and do your own research. Thanks. Yeah. All right. Next question is: do you think that some of these companies don't have a chance to be successful in the future because of trends or risks? Duolingo, Meta, Canva, Netflix, Novo Nordisk, and Eli Lilly. Yeah. You're gonna have to do your own research on that. But what I will say is, Meta is still run by the founder, and I personally don't invest in companies. I try not to, at least in the tech side, where the founder is no longer there. Okay, because when the founder is no longer running the company, the new CEO is very short-term focused, and they run the company for Wall Street, meaning quarterly earnings. And it's the wrong way to invest, wrong way to think, and wrong way to build a company. Yeah, but I'll let you do the research on the rest of those. Yeah.
By working in venture capital, is that where you learned that theory? I've always thought that was a important theory that you throw out to people.
Yeah, that's a great question. Absolutely. So whenever you invest in companies, like private companies, I would always rather invest in an A management team with a B business model rather than a B management team with an A business model. All we care about is the founder. Okay, obviously we look at the business model and everything else as well. And the founder has to be a good salesperson as well. Now, in the public markets, we all know that past performance is not indicative of future performance. And this is controversial, but in the private markets it is. Why? Because if you're a very successful entrepreneur, like Andy Bechtolsheim, who I've met a number of times, he was the very first investor in Google, and you've had lots of exits in the past, the probability that Andy Bechtolsheim is going to be successful in the future is much higher than the average person. Always start with the management team. The jockey is always more important than the horse. And that's why, Brian, in my spreadsheet here when we do investment research, we always start with the management team right here. Always, always, always. Because what is a good company? A good company is a company that has a great management team as well. All right, let me go to the next question here. All right. Is it okay to start with 20 to 25% of a desired position at first entry and then add another 25% pullbacks until I'm fully sized? That's logical. Yeah, what I do is I usually buy 50 basis points, which is 10% of my maximum position size of 5%. Okay, and then I hope the market pulls back materially. Sometimes I buy just 25 basis points if the RSI is high. Yeah, and always be patient and always tell yourself this. FOMO will destroy your portfolio. You will always get a chance to buy it lower. Let me say that again. You will always get a chance to buy it lower. Be patient. Yeah. And be a contrarian and watch your net worth take off. Just the way it works. All right, next question is, I'm European and 76% of my portfolio is in the United States. How would you suggest me to rebalance? Is 50% reasonable or should it be less? What are the top 3 other markets for investing? ? India. I love India, world's most populated country, world's biggest democracy.
Sorry.
Oh, are you coughing? Okay.
Yeah, just a cough. Nothing against India.
Okay.
Nothing
All right.
against India. Sorry
Okay.
about that.
Okay. We love India. We
Yes.
love everything about India. Okay.
That was bad timing on the
Yeah,
cough.
it's all good. It's all good. All right. Brian's a great stock picker. Sorry, that was bad humor. Sorry. I love you, man. He's a great stock picker, by the way. India could pull back near term because of Trump. But when it comes to Trump, with tariffs, H-1Bs, whatever it is, I always want you to think this. Don't focus on what Trump says. Focus on what he does. Okay? And what he does, and I'm not going to get political here, but what he does has to be approved by all government bodies as well. Supreme Court, etc. So for those of you with H-1Bs right now, I feel your pain. I've been there, okay? I'm from Canada. I was on an H-1B for years. Don't freak out, okay? And if your company has a lawyer that talks to you, and 72% of all H-1Bs are from India, by the way. But if your company has a lawyer that's helping you with this issue, talk to your own lawyer. Hire your own lawyer. Go to LegalZoom.com. Yeah. And don't worry. I don't think things are going to be as bad as expected. United States, yeah, we have problems here, but there's a lot of checks and balances. Yeah. Yeah. Now, please.
I'm going to say it's not that easy. I mean, and it doesn't matter whether it's Donald Trump, Obama. It doesn't matter. They all go through the same thing. You can't just sign something and then it becomes rule of law. In the United States, you have Congress has to approve it. You have the Supreme Court has to approve it. Now, it may become law that day, but usually it ends up in the courts, and you're noticing that a lot with a lot of political things in his first year. Yeah. The stuff he wanted to do ends up backfiring and he can't do. So as far as with the H-1B visas, that's a big, important draw into the United States, especially with education. When kids graduate from Harvard, you don't want to train these kids at Harvard and then send them back over. You're going to want to keep them here in the United States. So I have a feeling it could be short term, or they'll come to some compromise on that situation. But it is scary. So I can understand if you're in that situation because there's a lot of unknowns. But maybe the Supreme Court will knock it down. Maybe Congress will knock it down. We'll see. Just don't take everything for face value at this point.
Yeah. Yeah, I completely agree. And when it comes to politics, and for obvious reasons, we're in a very heated political environment right now. America is more at odds than it has been at any point in time, even going back to the 1960s with the hippie generation when they used to say don't trust anybody over 30. Please, I'm begging you guys, and get down on my knees. And I've been saying this for years. Hey there. Please don't share your political affiliation. On your LinkedIn profile, don't follow any politicians. Don't follow any business people that lean left or lean right, because half the people will like you more than the other half. I don't know who they are. And if you really express your political opinions, you all see what happened with Jimmy Kimmel. And you know, I did the sign of the cross and I prayed for Charlie the second he passed away. But you got to be careful, because if you express the fact that you are a Republican or Democrat on social media one time, just one time, that is out there forever. And when somebody does a background check on you, they will find that. Just be careful. And for those kids that use Snapchat, be careful too. That stuff could be saved forever. Yeah.
And it's too easy for people to misread or misunderstand what you were saying.
Yeah.
You may have said something that's harmless, and all of a sudden that's going to haunt you for the rest of your life. So I absolutely agree. Stay, at least in this current environment, maybe down in the future when things calm down, it'll be a lot easier to talk about. But right now, it's just not worth the risk of upsetting a potential client or a potential investor or someone you're trying to get a job with. You don't want to upset them too at the same time. So it's just, I agree.
Yeah.
Best to avoid it at all costs.
Yeah, little things like don't follow Michael Bloomberg on your LinkedIn profile. He's a Democrat. You know, don't follow Mark Cuban. He's a Democrat. Don't follow Republicans as well. Okay, and I'm trying to be careful here in terms of my comments. Yeah.
Yeah. Focus on your own life. Don't focus on other people's. It's really what it comes down to.
Yeah. And in terms of the question about too much reliance on the U.S. As your portfolio, because you're in Europe, I'd be really careful. Yeah. Too much U.S. dollar exposure could hurt you. What I would probably do is, it's great to have U.S. exposure in your portfolio, because I believe that the United States government is the last company on the planet to ever go bankrupt. And I think the S&P 500 are better run companies than the United States government is, of course. That being said, if you have too much U.S. dollar exposure, it's a risk. It's a risk. So how do you solve this? Well, go to etfdb.com, that's etfdatabase.com, and pick ETFs in your markets. And it's really important also in your retirement savings program to understand if there are benefits from a tax perspective, pay less tax, if you invest in local companies. Yeah. All right. Okay, next question is, what are your opinion on VTM swaps? Yeah, Vietnam swaps, sorry. Yeah, just be careful with that, okay? When you're buying any fund or ETF that has derivative instruments in it, it's extraordinarily risky. And that's why I don't like those ultra short or ultra long investments. Now, if you are going to buy an ETF, I don't care what ETF it is or what security, you always have to read the prospectus, meaning the investment offering memorandum, before you invest. Okay, do your research that way. All right. Next question is, would you invest in Chinese or Saudi Arabia ETFs? Yeah. I've been burned on buying, and this is not anything to do, a stereotypical comment with Beijing or anything at all. But in the past, I've personally been burned buying stocks headquartered in China. Just from an accounting perspective, it hasn't worked out well for me. The exception to that could be ADRs, meaning American Depository Receipts, like companies like Baidu, for example, that are dual listed in the U.S. markets. Yeah. But I always worry about accounting. Now, United States, there's lots of problems here, but has the highest number of lawyers per capita in the world. And what that means is in regulated markets, like financial services and healthcare, you're safer, relatively speaking. Yeah. Don't ever invest in any stock or investment if you can't read an investment offering memorandum. Yeah.
And if you're going to invest in China or in different countries, make sure you understand what the political climate is like. Can president or whoever's running the country seize a company or take it over very easily? These are things you need to keep in the back of your mind too as well.
Yeah. Yeah, very dangerous. And then also ask yourself the 5-year question as well. In 5 years, will this company be more relevant or less relevant? That sort of thing. Okay, give me 1 second. I lost my place here. Search for the word China. Give me a second. Let's go up here. Okay, give me a second here. Oh, Chinese, that's why. Okay. What would be a good ETF to invest in that has no U.S. holdings in it and has similar returns to the S&P 500? Yeah. I would just look at ETFs on ETFDB that are exposed to Europe, okay? And only buy from very high-profile ETF companies like Vanguard, Schwab, etc. Yeah. Okay. And then given a target allocation of 30% U.S. equities, you're based in Europe, yeah. Would a split of 20% S&P 500, 10% Russell provide better risk-adjusted growth than allocating the full 30% to the S&P 500? Yeah. Yeah, in the long run. So for those who are not familiar with the Russell 2000, it's 2,000 smaller cap stocks, okay? So I think the Russell 2000 could be a better investment than the S&P 500. It's much riskier, but it's only going to outperform the S&P 500 in a bull market. And I'll let you decide where you think we are in terms of are we entering a bear market, etc. But that shouldn't matter. You should be long-term focused always. Yeah. And when I look for stocks that are 5x5s, meaning stocks that I humbly believe have a 500% return within 5 years, and I'm usually wrong. But when I do that, I usually use the Russell 2000 index to find those stocks because a lot of larger cap stocks in the S&P 500, the Dow 30 components, are probably not going to be 5x5s. It's the smaller cap stocks that are. And what I also use, do your own research please, is I use the IBD 50, Investors Business Daily 50 growth stocks. And I do tons of research on those, and maybe I'll pick 1 or 2 of those. Yeah.
So I wanted to ask you a question that goes along this line. What do you think about companies like Motley Fool and podcast companies and other YouTubers who are talking about investing and how to invest?
Yeah.
What would you like to tell everybody there?
Yeah, absolutely. It's a great question. So I don't want anybody to ever rely on anyone to tell you what stocks to buy. I want you to do your own research. Why? Because if you do your own research, you're not going to sell at the worst time. And you're going to be long-term focused as well. And you're going to be a pit bull and a pork chop. In terms of Motley Fool, if you want, do a search on my YouTube channel on Motley Fool Reviews, or just Motley Fool Review. I think I have the #1 video on YouTube on it. I threw them under the bus a couple of years ago. Yeah, just please do your own research. And one of my clients putting together a class action lawsuit as well that may or may not be affiliated with a company like that. Yeah, so please be careful. Yeah.
Now with Robinhood and these trading platforms people are using, they do the top 10 list. What do you think about that?
Well, I always do my own research. Yeah, always. Yeah, and if you rely on, say, a Jim Cramer to buy a stock, and all you do is rely on him. He's a great salesperson, by the way, right? He is probably the second smartest person I ever worked at Goldman Sachs, the first being Robert Rubin. But if you rely on him, he can sell, man. He's brilliant too, right? Like his brain, he remembers every ticker on the planet. And he's really bullish. And he says, buy, or whatever he says. Say you buy it. And the next day he says, sell, sell, sell. It's a recipe for disaster. Don't ever rely on him or me or anybody else. Always do your own research. Okay? Yeah. And remember Jim Cramer, back in 2008, he was kind of implying everybody should buy Bear Stearns. They'll never go bankrupt. And I remember the day that Tesla went public, he threw it under the bus. Just do your own research, okay? Please. I say with love my heart. I care. Yeah. Okay. Okay, question is about palladium or broad commodities ETF. Would you invest? You got to be long-term focused. So if you're asking me, would I invest in an oil-based ETF in the long run? No. A very famous Saudi Aramco executive once said, the Stone Age did not end because they ran out of stones. Yeah, just be very long-term focused. I'm very bullish longer term on rare earth, also copper, gold, obviously. I think every portfolio should have gold if it pulls back, that sort of thing. But whenever I invest in stuff, I always ask myself, in 5 years, if it's commodities based, in 5 years, there will be more demand for this or less demand. I think there's going to be more demand for this, right? So the biggest gold consumer in the world is India, right? India's growing quickly, and I expect India to potentially be the largest economy at some point in my life. GLD is a ticker. Put it on your watch list. Buy it on a pullback if you do your research and you like it. Yeah. Never buy physical gold. Only buy GLD, the ticker, because that way it's real, even though the fees are like 50 basis points, something like that. Yeah. All right. But generally speaking, if you're not sure what driver to use for your financial model to decide what's going to make a stock go up or down, if you see that with the commodity, a company like Barrick Gold, for example, price of gold going up and the amount of gold that they mine going up, it's probably a good long-term investment. But do your own research first, please, in case it ends up as another BREX. And for those Canadians that are my age, you know what that means. I don't think it will be a BREX. All right. Next question is, what do you think of founder-led mid and small cap companies suitable for value in investing? Yeah. I'm more of a growth investor. And if it's founder-led and it's mid and small cap, for the most part, it's usually a growth-oriented company. But you're going to have to do your own investment research and ask yourself, 5 years from now, is this company going to be more relevant or less relevant than it is today? Do you think the founder's still going to be running the company in 5 years? And do an entire investment research write-up with the templates I showed you.
Yeah, and I don't think there is any value companies that are small caps at this point.
Yeah.
Generally, those are very large cap, blue chip companies that have been around for a long time.
Yeah, absolutely. Absolutely. All right, next up, Life wrote here, hi, Chris, I'd love to see you back. Good, thank you. With respect to venture capital, have you met many founders, CEOs? Could you please drop some of the books from their desk and your favorite too? Yeah, so the most important book, so I've had problems with procrastination. I want everybody to write this down. Okay, this is serious. The way to stop procrastinating is to read this book. Ready? Write this down. How to stop procrastinating. Okay. It's a great book, but I never finished it. That was awful. That was terrible humor. I'm so sorry. Okay.
I think you struck out on that one.
I was awful on that one. Okay. Laugh at me, not with me, please. Yeah. In terms of books, so I remember when I worked at a great hedge fund called Citadel, and I spent 30 minutes one day, having a one-on-one chat with Ken Griffin, super smart guy. And whenever I'm in somebody's office that's more successful than me, which means every office I visit, like yours, for example, I always look at their bookshelf, see what books they have, if they have them. And for him, he had, I think one of the books was a Damodaran book, who's an NYU finance professor. Yeah. But there's really no textbooks that will teach you finance. Yeah. I'm not really a believer in that. Unless you want to read books by Nicholas Taleb, it won't help you with stock picking, but it'll help you with stock trends as well. So read every book that Nassim Nicholas Taleb has written. I have to use a dictionary when I read it, and I always learn a lot of words. Yeah.
Newer book that's really, really good is called Psychology of Money.
Yeah.
And I'm not trying to promote or whatever. I did read this earlier this year. It's more about how you think about money and why people invest the way they do. it's brilliant. The author, I wish I could remember his name. I don't remember what it was. But if you really want to know what goes into our thinking and how to alter the way we think and how we should think about investing, and it's not just investing, it's everything in life too as well, I would recommend reading The Psychology of Money. And I think it's became a New York Times bestseller too as well.
Yeah. Yeah. And another one I like actually, and my dad told me only take advice from successful people. So don't take advice from me, folks. But here's a good book. It's called One Up on Wall Street, written by Peter Lynch, who worked at Fidelity. He managed the Magellan Fund as well. This is a really good book to read. I think you'll enjoy it. If you're having problems sleeping at night, you can read a McGraw-Hill book of mine called Finance Essentials for Managers by Chris Haroun. Is that how you pronounce his name? Yeah. Okay. All right, let's move on to the next question here.
I will say with Finance Essentials, it's done well enough to where it breaks everything down. So when you become a student of the class, it's almost, they go hand to hand.
Yeah.
So I wish I would have had that in the beginning when I first started, because it's like a refresher. You would go through a class, and then I could have read the chapter on it, and it brings it all back.
Yeah, no, thank you. And for those of you having problems sleeping, this is the answer.
Yep.
Okay. All right. Okay, and then Life wrote, please don't stop the Billionaire series analysis. Yeah. Yeah, so I do Billions vlogs. I think I've done the first 2 or 3 seasons. The first 2 or 3 seasons are my favorite. I think that the next one, Brian, I'm going to be doing is this one right here. So I've got the complete series of Suits. I showed it on a webcast recently. It was on my table. Look at the screen there. And people said, Chris, why do you have sluts on your desk? Sorry. Yeah. But I'm going to experiment with this. I'm going to do the TV show Silicon Valley as well. And what do you guys want me to do? Let me know what movies you want me to do a review on my YouTube channel. You know, one of the issues is I've taught every topic I can think of. I'm sure there's more. So I'm starting to resort to movies now, which is fun. Yeah.
So what's been your favorite movie or series that you've done so far?
Probably Margin Call.
I love that movie. That was brilliant.
Yes.
The act, not just the acting.
Yeah.
That really happened. And what people don't realize, that is what people were thinking about before everything collapsed. And they were in a mode of just, how do I save this business type situation. That's probably my all-time favorite movie when it comes to the 2008, 2009 financial crisis. That explains it better than any other movie. The Big Short is up there, but The Big Short is kind of a precursor. And Margin Call is like, this is happening right now. How do we handle it?
Yeah, and there's three movies that really sum up what happened in 2008. Margin Call is from the perspective of a sell-side investment bank, Lehman Brothers. Too Big to Fail is from the perspective of the United States government, and The Big Short is from the perspective of a hedge fund. Yeah. Oh my God, we lost like 10 people there. Okay, that's a good thing about doing these things live is when people are bored. It's probably my awful dad humor. Okay. All right. Oh, my CMO wants you guys to click the like button, subscribe, and all that stuff. Okay. You don't have to. Okay. Next up, hey, Peter Caffin wrote, hey, Chris, with the founders no longer involved, what do you think of the United States takeover of the U.S. arm of TikTok? Is it doomed? Is it another MySpace, maybe? I don't think growth is going to be as torrid if the founder and the CEO based in Singapore, solid guy, is no longer involved. If he is somewhat involved, it might work. If not, I don't expect the growth to be as torrid. It can't really be. There's over 150 million Americans already on TikTok. Yeah. But I do believe TikTok disgusts me sometimes. Okay, and I do TikToks daily as well. But what scares me about TikTok is the extreme commentary, right? Especially with Charlie Kirk. I mean, I don't care if you're a Republican or Democrat. This is a man that has a wife and kids, and it makes me sick to my stomach. And the views on other videos in general are so left wing and so right wing that it's tearing this country apart. And I think that freedom of speech is a good thing, but if it's hate speech, there has to be some regulatory changes. And I've noticed that a lot of the comments are from unknown people. And it worries me, and you're going to think I'm crazy here, Brian, but I think that some of the enemies of the United States have these accounts to try to split the company in two, or the country in two. Yeah. Yeah. So I think we need a more regulation there. Now, when it comes to YouTube, like I've noticed that there's not as much hate speech on YouTube. And one of the reasons why is because many years ago, YouTube created this failed product called Google Plus, right? It's a social media product. But the genius of that was this. At that point in time, they made it so that you have to have a Gmail account if you want to comment on a YouTube video. And so hate speech went down a lot on YouTube as well. And with TikTok, if Larry Ellison and whoever else takes it over, they've got to find a way to crack down on comments that inspire hate speech and death. Yeah. And I think there might be a very minor change to the First Amendment, which is freedom of speech, where maybe a new amendment needs to be made, which is, yes, freedom of speech is cool, but not when it comes to hate speech or something that could lead to violence. Yeah.
Yeah, and as far as that, it's TikTok and them have made it so easy to create these accounts that anyone can create an account in a matter of seconds, and then people get off on these horror stories, and they do it for clickbait, or it makes them, I don't know. I think if you're doing that, you have to ask yourself why. Why is this?
Yeah.
Why am I doing it? When I was in New York 2 weeks ago, I was leaving my office, and then there was a fight that broke out on my way to the train. And everyone's first response was to grab their phone and start videotaping. It wasn't to find out what was going on, to stop it, or to help people. It was, I want to post this on Twitter or TikTok, whatever it is, for views or likes. And it just blew my mind that, I don't know, at least 20 people sat there videotaping these two people go at it in the middle of the street until the cops came by and broke it up. That shouldn't be your first response. In that situation, is all I'm saying. So I think that's the problem when it comes with TikTok and these social media platforms, is people, it's made it so easy. There's no accountability, because you could create whatever name you want. It'll never come back to you in regards. Like Facebook, where it's tied to your name, people lose their jobs if they do certain things. Not so in TikTok or any other way.
Yeah. And, I'll call a spade. Racism globally is probably at an all-time high. Because of social media networks like TikTok. It makes me sick. And let me talk about my religious background. Okay? All right. So I'm Roman Catholic. Okay? And let's just say, and I was born in Canada, I live in the United States. Let's say that Italy declares war on country X, and people start not liking me because I'm Roman Catholic. That's not fair. So generally speaking, I think we need to understand, that stereotyping anyway is wrong. There's no fucking conspiracy out there. We should all have decency and not promote anything that leads to violence, death, etc. on social media. And again, I think there needs to be an amendment to the First Amendment. Freedom of speech, yes, but not if it's going to cause harm. Yeah. So anyway, those are my thoughts. I know it's a touchy subject, but that's what I think. Okay. All right, next comment is, I do believe in freedom of speech, and it should be there, but just anything on social media apps, loathe vulgar comments to anyone, just degrades the very human nature of our morale. Yeah. I firmly believe there should be a cap and limit on the negatives to which one can go. I agree. And it breaks my heart, but on my YouTube channel, I had to block a bunch of words because of hate speech against me and hate speech against others. And so I've cleaned it up. I block people that spread hate speech as well. But it breaks my heart that that's what we come to. Yeah. But it's not as bad, to be honest, on YouTube compared to other platforms. Yeah. I'd say in terms of the percent of hate speech, I'd say YouTube has the lowest percent-wise, partially because if you want to leave a comment on YouTube, you have to have a Gmail account. Yeah.
Well, compared to LinkedIn, I don't see it on LinkedIn
Oh, actually, you're right.
at all. So,
LinkedIn is the best by far.
yes,
Yeah.
somehow they
It's the-
figured it out to where it's
Huh.
done pretty well. I don't know how they've
You're
been
right
able to
about
do
that.
it.
Oh, I know why. Because we have to have an. Actually, that's a good point. If anybody out there from Microsoft wants to share with the world how you keep LinkedIn clean, please let us know. That's a very good point.
Yeah, but I never worry about what I'm seeing on LinkedIn.
I've never seen anything.
Even with the recent political turmoil, there was a little bit there, but it
Yeah.
wasn't a lot. It was
Yeah.
kind of contained.
Huh.
But and the people who did voice opinions, generally they weren't using
Yeah.
bad words or profanity. They weren't
Yeah.
hate speech.
Yeah.
LinkedIn has mastered it as far as safety. At least I
Hmm.
feel. Don't go ruining LinkedIn for me, but I think they've mastered it.
Yeah.
YouTube probably does a little bit better job than a lot of others, but I
Hmm.
still see a lot of negativity on YouTube. It's really hard to stop people from posting.
Yeah.
I don't know how LinkedIn pulled it off, so,
Okay.
but I think
Yeah.
they did. So,
Yeah. No, I'm with you. 100%. 100%. Very good point. Okay. I read every comment and every question here. Dre MBA wrote, good morning, Chris. Good morning. Are there any independent resources to cross-reference government date following the firing of Erica McNamara in the U.S.? Thank you. I don't know anything about that. I'm sorry. Yeah. All right. Next up, Alexandra wrote, what are your views on H-1B recently? I think preventing educated immigrants at the same time not subsidizing education is not a good recipe of policy. Yeah, I would say there's so many incredible companies that have added so much to our lives and to the wealth of Americans and the world, information-wise, that are people that run H-1Bs. You know, you got Elon Musk, right? Love him or hate him, he's done good things for the world with solar and all that stuff. Okay, and you know his 60% market share of satellites, of launching satellites to help with information, to stop the spread of propaganda, etc. You know, people like Sergey Brin, who I think he was born in Russia. He might have been on H-1B. I'm not sure. You know, the CEO of Google right now, he had an H-1B from India. I think it's absolutely the wrong decision. Yeah. So anyway, but again, as I said earlier in the webcast, don't focus on what Trump says, focus on what he does. And there's enough checks and balances, regardless of your political affiliation. There's enough checks and balances in the United States to stop extreme stuff, I believe. Yeah. All right. Next up, Kevin wrote, good morning from Lakeland, Florida. Great to see you, Kevin. Kevin subscribed to my Silver MBA years ago. Yeah. All right. Alexandra, how are you? Wrote, I think hospital, the arms industry, and education, to some extent, should be run by the government. The rest you can make private. At least there should be government hospitals in the United States. So yeah, I'm Canadian, but I have dual citizenship. But one of the many things I love about Canada, okay, I'm so proud to be Canadian. Yes, taxes are higher, and I hate that, but healthcare is provided. And I think healthcare should be provided for free to all Americans. And heck, if Trump is raising tariffs, he should say the use of proceeds from the tariffs, instead of just making America rich again, should be something along the lines of, this is to fund healthcare for all of you. Yeah. So anyway, those are my humble thoughts. But I don't believe that governments should run big companies. Like, I don't believe government should run, educational institutions. You know, I don't want a Democrat or Republican government to tell universities what to teach. I believe in freedom of speech. I also don't believe that governments should run hospitals, right? Because governments can't really run things efficiently because there's no incentive structure in place where people can make a lot of money, etc. Yeah, that's just my humble opinion. Yeah.
so more funding the operations, just not managing the operations.
Yeah, and I'll give you a great example. So there's a great economist named Michael Porter. He came out with the 5 forces model. And Michael Porter, back in 2001, he wrote a book called Can Japan Compete? And of course, Japan can compete. And I love Japan. And when I worked at Goldman, the first IPO I worked on was NTT Docomo. Okay, very, very small people worked on this IPO. Sorry. But that book, what he did was he basically said after World War II, the Japanese economy was in shambles for obvious reasons. And what the Japanese government did was the Japanese government gave money to every single sector of the economy except for two sectors, autos and consumer electronics. And those are the two most successful sectors out of Japan. Companies like Sony, Nintendo, Toyota, Honda, Nissan, etc. And so I think that too much government incentives, it's kind of like giving too much money to a spoiled rich kid. They're not going to stand on their own 2 feet. Yeah. So I'm probably more of a libertarian, to be intellectually honest. Yeah. Okay. And in terms of who do I vote for, Republicans or Democrats? I didn't vote in the most recent election. But growing up in Canada, I love Ronald Reagan. I love that man taking on communism, which is filth. So I came to the U.S. and I thought, oh, great, I could vote Republican. Well, I didn't vote in the last election. Yeah, but I go back and forth. Yeah. And don't share your political affiliation with anybody, please.
And it can stifle innovation because once people get comfortable with the way things are, they tend to stay that way. It's a natural human habit of ours. So creating that free open market does incentivize people to come up with the next best thing that we need. And governments aren't really known for that.
Yeah, absolutely. All right, next question is from Majed. Good to see you. Hey, Chris, hope you're doing well. Likewise. I might need to split my question into 2 parts. Sure. I'm an engineer with an MBA in investment management and a CFA level 3 candidate. I'm skilled in Excel, SQL, Power BI, and also have FP&A experience from my home country. However, over the last 3 years in Canada, my work has been focusing on compliance and regulation. I'm now looking to transition into FP&A. Do you think that's possible? And how challenging might it be? Yeah. So the most important thing, and if you want, you can go to the link in the description of this webcast, set up a call with somebody on my team. We could talk about what we do. But the most important thing you can do is have an incredible LinkedIn profile. Okay. And then network aggressively. And I'm going to show you one of my clients who has the best LinkedIn profile, and he works in FP&A. Okay. He's a great guy. He loves where he is. Give me 1 second. I'll go here to. All right, it's not a perfect green screen, but it'll work. Good enough for government work.
And LinkedIn right now is your best business cards that you can hand out.
Yeah, absolutely. So what you want to do is, with your LinkedIn profile, okay, you want to first of all have, and give me 1 second. I'm going to get rid of us in the corner here because the green screen sucks today. Sorry about that, guys. All right. But what you want to do is, a lot of people don't have a nice background like this. This is crucial. Optics matter. It's the first impression people get of you. What does this tell me? Oh, cool ideas, right? And when you design this, don't put too much text on it, please, because when you look at the mobile version of this, the face is going to be much bigger, blocking the text. Good picture, smiling, of course. This is the most important field in all of LinkedIn, okay? This is the subject. So from an SEO, search engine optimization perspective, if you have a good one like this, you will get more recruiters reaching out to you if you want. Now, Gurpreet is very happy at the company he works at. The About section, you want to write it in the third person, okay? Like you're about to give a keynote speech and somebody says, hey, do you have a bio I can read to introduce you? So use it this way here, okay? Third person. No more than 3 sentences per paragraph. And for the rest of your life, and I have my own column in Forbes magazine, I've written lots of books, etc. And my editors always tell me, no more than 3 sentences per paragraph. Less is more, okay? All right. Then what you want to do also is obviously have very detailed bullet points here, yada, yada. And the most important thing I can tell you, nobody does this, and GP's the best at this. He has lots of friends. You want to get tons and tons of recommendations written for you, okay? As many as you can. I recommend 30 or 40 if you can, and then don't follow any people that are political. Now, I'm going to give you an example. So when I worked in venture capital, Sequoia led the A round on a company called Cohesity, and the company I was at, we led the B round. I had a board seat. And when I was doing due diligence on Mohit, I went down to recommend, I think he had like 25 recommendations when I looked at it back in 2015. Let me go down here. Yeah, 25. Yeah, 2015 when I was doing due diligence. And this really pushed me over the edge in terms of investing in him. Obviously, I did a lot more investment research, but I want you guys to have a lot of recommendations, okay? Because it's easier to brag about yourself if somebody else does it. All right, let me go to the next question here. Thank you. All right. Yeah, but you're gonna have to set up lots of networking meetings with people that have that FP&A job, that have something in common with you. Maybe they went to the same high school as you, the same university, etc. Send an email. The email will say something like this. And don't send emails, send in-mails, because everybody in this webcast has read every in-mail you've ever received. In the email, you're going to write something like John Hopal as well. I also went to X University, and I also live in the Bay Area, wherever you are. Please let me know if you have time for a coffee or a quick Zoom meeting. Thanks a lot, Chris.
And most people are more likely to read their emails before they read their emails.
Yes.
So it's that red little flag that hops up on the top screen just annoys you, so you're forced to click on it until it goes away. Or at least for me, so everyone's different. Yeah. But I don't get a lot of spam too, so it's pretty good about keeping people actually who do want to reach out to you too at the same time.
Yeah, absolutely. Ask and you'll receive. It's prophetic. It's been true since the beginning of time. Your network is your net worth. Relationships are always more important than product knowledge. Network. And the way you want to network is you want to find people that are 10 or 20 years older than you, that are very similar to you, but they're living the life you want to live career-wise. And if you reach out to them, you are going to get, more often than not, that one-on-one meeting. Why? Let me put it this way. Let's say it's 20 years in the future and you're way more successful than you already are today. And somebody reaches out to you that is very similar to you and has had the same path as you. And they say, Joanne Hopal as well. I also went to X high school and I also live in the Bay Area, whatever. Please let me know if you have time for a coffee or a Zoom meeting. Thanks a lot, Chris. You're going to help that person because that person is you. People want to help you.
Yep. We've all been through that. We've all started at the bottom. So whenever I can help anyone out, I more than love to. I try to do my best with it. Yeah. And I'm sure they will too, whoever you're reaching out to.
Yeah. Give and you'll receive. It's prophetic. It's been true since the beginning of time. And there's a great book by Adam Grant called Give and Take. And the bottom line message of that book is this. The richest people on the planet. The richest people on the planet, some of them are selfish, whatever. Some of them are not nice people. A lot of them are. But the richest people on the planet have usually one major thing in common, which is this. They have a bigger heart. They like to help people. Okay? Along the way, they help people. Right? And every humble success I've had has been somewhat attributed to helping people. You got to do it in the goodness of your heart, right? But it helps. Yeah.
When you help enough people, you'll get what you want in life. It's all about helping others.
Yes. And a company is only as good as its customer service. Yeah. And Jeff Bezos once said that customer service and profitability are almost 100% correlated in the very long run. And for those of you that work at smaller companies competing with bigger companies, one of your sales pitch data points can be this. Unlike big companies, our customer service is way, way better. I'm available to you 24/7. Yeah. And that's why, like for example, with Brian's company, from a customer service perspective, he runs circles around the Goldman Sachs of the world. Yeah.
They have direct contact with me, and that means a lot to a lot of people, just to be able to call me directly instead of going through secretaries, rigmaroles, or office hours. It's constant connection, which is nice.
Yeah, absolutely. And then next up, Alexandra wrote, recently I got overconfident and lost a massive amount of money in options. I did not research much, and I got more excited to invest in a big portion of my capital on options expiration the next day. Yeah, please be really, really careful. I don't want anybody in this call to underwrite options, meaning sell them. Okay, and the reason is, if you don't have experience, you can lose way more money than what you invested if you get randomly assigned. The only reason you should invest in options is for two reasons. Number one, you want insurance on a certain stock, okay, in case it goes down that you own. Or number two, you've done investment research on a company, you think it's a 500% return within 5 years, and you want to buy 3-year leaps. Okay, that's it. Okay, and those are calls. And when you invest in a call, like a 3-year leap, for example, if the underlying stock has options, what that means is you're investing this much money. If the stock goes up, you make a killing. If it goes down, all you lose is this here. Now let's talk about puts and portfolio insurance. Let's say I own a ton of Coca-Cola shares and I don't want to sell it because it's been a 100-bagger, right? And by the way, if you bought Coca-Cola the day of the IPO, you're down 50% 1 year later. But if you held it forever, obviously you'd be doing very well. So let's say that I own a lot of Coca-Cola and I don't want to sell it this year, but because I don't want to pay taxes, but I'm really, really worried about Coca-Cola's earnings over the next couple of quarters, whatever it is. And I think the stock could go down. So what I could do is I could buy what's called a put. And if Coke goes up, I lose this. If Coke goes down, I make this. Okay? And that's what Mark Cuban did, sort of, with respect to his position in Yahoo after Yahoo bought broadcast.com for $5 billion back in 1999 or so. Yeah. He protected his capital. But do a lot of research. But I don't want anybody to be an options day trader, because I promise you there are sophisticated hedge funds that have tons of PhDs, meaning brains on a stick. Unlike me, I'm just a stick. But they have lots of PhDs that analyze this stuff to death. And they screw us retail investors because we can't understand the difference between historical volatility and implied volatility. Yeah.
And you can also use it in a way that if you have the research and you love the company and you plan on buying the company in the future, you would execute those call options, but maybe you don't have enough money today to buy the position you want. So to avoid the market going up or down, you just want to protect that price. You would buy usually they're 2 years, 2-year leaps. That way, when you do have enough capital, you can execute the option and buy those shares at the stated price. That's really what they're meant for, is so you can build a position in the future.
Yeah, well put. Thank you. Okay. Mr. Orange 86 wrote, hi, Brian and Chris. Hey, I'm a corporate lawyer and would love to know what each of you look for in a lawyer if you ever need one. What makes a good lawyer stand out in your eyes? Can you please go first?
I live in Washington, D.C., so almost everyone's a lawyer. So I am inundated with lawyers.
Yeah.
The people I have hired, they're people I tend to like. Again, we bring this up in business. You always do business with people you like. It's the same with lawyers. I'm going to go with the person that either I've known for a while, my kids play on the same baseball team, basketball team. We have some form of connection, so that way it becomes easier to do business. But I need to like you first. I know some people only care about results. Yes, results are important, but I need to know who the person is I'm working with. It makes me feel better inside. That's my advice. Know who you're dealing with.
Yeah, absolutely. So for me, if it's something simplistic, like register a company name or a trademark or a copyright, I always go to LegalZoom.com and do it for the cheapest price I can get. I'm not affiliated with them or anybody, but I always use LegalZoom.com. If LegalZoom.com is not available in your country, do a search for your country's equivalent of LegalZoom.com. When it comes to other matters like tax accountants, of which I pay close to $1,000 an hour, I hate it. Yeah. And I keep telling them, fucking talk faster, man. Right? Sorry. Yeah. But you always want to go through friends, right? Like there's no Yelp for lawyers, whatever, that I care about. I ask my buddies. I find, buddies of mine that are more successful, which is all my buddies. Who do you use? Are they good? Can you introduce me? Same thing with an accountant. That's what I do. Yeah.
And I also look up their LinkedIn profile to see, now lawyers tend to not update that as much, so it's probably not a very good case to use LinkedIn for lawyers, but at least shows, some they attempt.
Yeah.
Maybe it's not as pretty as some of your students have or anything else, but there's something there that just gives you some form of background history too that you may not get otherwise too. Like how long have you been in law? Where did you go to school? Little things like that do make a big difference.
Yeah, makes sense. Yeah. And one thing I want to say for all of you out there that have kids, please set up a trust and a will. You can do it at LegalZoom.com if you want to. Yeah. Yeah. What are your thoughts on trusts and wills? And let me ask you, how do you minimize taxes using a trust? And explain what a trust is if you can't, please.
Okay. So I can only speak a little bit because I do trust accounts. The way I'll have to answer this, I would recommend using a trust lawyer. I know you can do it on LegalZoom, unless it's very, very, very basic, but nothing in life is ever basic. You would go to LegalZoom if it's, let's say, me and my wife, we've been together forever, and it's going to be a simple 50-50 split. If I die, she takes over the trust. If she dies, I take over the trust. If we both die, everything goes to the kids and it's split. Yeah. If it's something simple like that, LegalZoom, but nothing is ever that simple. There's a lot of things. So I would recommend, I can't strongly say this enough, it's like an accountant, don't try to do it yourself. I don't think the technology is quite there to be able to handle all the different scenarios that can arise. You and Christine, there's probably a lot of things you probably wouldn't have thought about if you did it online versus having someone sit there and say, have you thought about this, 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 and this? Right. Hire someone.
Yeah, very important. I'm worth more dead than alive too. Yeah.
But you're talking about the most important part is the finances of the family. you really don't want to go cheap on that.
Yeah. Yeah.
You want it done correctly. You want
Yeah.
it to work.
Yeah, makes sense. Yeah, makes sense. And one other thing I want to quickly say, and I've said this many times, but I really believe this. I say this with my heart. Don't do your own taxes, ever. Okay? Doing your own taxes, meaning not hire an accountant, is like doing surgery on yourself. It sounds cray-cray, but the tax code changes all the time, depending on, which, municipal, provincial, state, or federal government is in power. Get an accountant, a good accountant that can do your taxes. They might get you back more money in the long run as well. And they'll help you also if you have a business. If you have a business, I want the same lawyer to do your professional taxes and your personal taxes in case you make mistakes on both sides. And they'll keep you in the confines of the law in terms of how much money you can get back as well. Always hire an accountant. So how do you find a good accountant? Well, it's similar to what I said before. Just ask your successful friends, family members, etc., to recommend an accountant for you. Yeah. One more thing I want to say about law, okay, about lawsuits. If you look in the financial reports on SEC.gov for any company, like their 10K, 10Q, whatever it is, you're going to see tons of lawsuits. Okay, and for those of you that run your own companies, okay, if a lawsuit happens, right, and you got to be protected. Obviously, a lawyer's going to set up an LLC if you want, which means that your liabilities are limited. Don't ever fear a lawsuit. Okay, there's a lot of pricks out there that'll come after you for money. Don't fear them, and never get it. Yeah. So I've had people come after me to try to take money from me. I welcome it. Yeah. Don't ever fear it. Yeah. All right. And I do love the lawyers I work with. Yeah. And civil rights lawyers. Yeah. And it's killing me, Brian. I want to say a lawyer joke right now, but I know I can't. Yeah. All right, next up we have Jiaming. Jiaming, I'm looking forward to meeting you, along with many of my other clients, at my 3-day event this weekend. Brian's in town for that as well. So Jiaming wrote, "Hey Chris, always good to see you. Likewise. I'm excited to finally meet you in person this Saturday. Likewise, thank you. I have a couple questions I'd love to hear your take on. What's your best formula for keeping a Zoom meeting concise but still meaningful, especially when trying to build trust?" Yeah. So what I would say is a couple of things. Okay. So with a Zoom meeting, you want it to be well lit on both sides. Okay. You want to stand at least 5 feet away from the wall. Okay. So you don't cast shadows. Another thing you want to do, if it's just you, is you want to make sure your head is somewhat close to the top. It's a little bit trickier to do it in real time, but I recommend that because it shows confidence. And you also want to be at eye level, which we're doing perfectly right now. Yeah. What I would also say is, and this sounds really silly, but what I want you to do is just get a Post-it note, okay? And this is out there, and do this. Draw a happy face. Can you guys see that? It's a happy face. See, he's smiling. Yeah. Everyone smiles when you, and then put it right by the camera, okay? And this will keep you happy because you never had a second chance to make a first impression. That's like a cheesy Head and Shoulders commercial.
I know, but it works. Yeah. It's crazy how well that works. Something silly like that makes you feel good.
Yeah.
Another thing I would recommend too, and I learned this in Chris's class, is keep some form of monitor in the background. And what I use is PowerPoint on Microsoft, and I wrote up the meetings that I want to discuss. So if we go off topic, I'm able to go right back to it or hone in the meeting to get straight to the point. So that way it's seeing it on they can't see it, but I see it directly in front of me. So usually a monitor next left or right to the camera with just your bullet points that you want to discuss. And then anytime you get off that, bring it back in, hone people back in.
And set an agenda as well. At the beginning, these are 3 things we want to talk about, okay? And practice like crazy, obviously. Just make sure that you're always on track. Yeah, and if you forget to say something, don't worry, they'll never know. Just move on to the next data point. Yeah, and let me quickly talk about how do you manage people remotely. So if you're managing somebody remotely, which I do a lot, and they're brand new to work, what you can do is this. Have them send you 1 email every day. And in the email, they list 3 things. Number 1, what did you accomplish today? Number 2, what are you going to accomplish tomorrow? And number 3, do you have any questions or issues you need to discuss with me? Yeah. And then once they're more experienced, you don't have to do that daily, maybe do it weekly. Yeah.
I would also say backgrounds. A lot of people take the backgrounds for granted. And everyone's different on their opinions. I know with the fake New York background or the park background, when I'm meeting with people who use those things, I kind of get distracted because there's this halo effect. And also messy rooms, if you're doing it in your house, clean up the background. The background's very important. You want it to be as clean, as concise as possible so it's not distracting from what you're talking about. Because people will find any reason not to listen to you. It's just human nature. And your background is a good reason for people not to listen to you and focus on what's going on.
Brian, I had so much garbage in this room before you came. I cleaned this room up big time, but it was brutal before, just to be intellectually honest. Yeah. Okay. And when I used to work at Goldman, I would always have my desk clean. Every day I go home, we'd say a clean desk is a happy desk.
Yeah.
Okay. All right. Next question is, when you read a 10K, meaning the annual report, what's one overlooked section that you think students should pay more attention to? Thanks. Really looking forward to meeting you Saturday. Thank you. Yeah.
The risk profile. What risk are you taking? That is the number one thing you should be looking at.
Yeah. Brian's right. So you can always do a search through the 10K, meaning the annual report, for the word risks. And because there's so many lawyers in America, which is a good thing for investors, you'll find all the risks. Another thing I recommend to look at, and I have a course for this available on my website, is you always want to take a look at the footnotes. Okay, and a lot of people don't know what this means. But a footnote, it's like, when you write a book report, you have footnotes. Well, if you just look at the three major financial statements, the income statement, balance sheet, and cash flow statement, you're missing a lot. So beside the balance sheet, certain line items will have a little number beside them, like 1 in brackets. And that will help you. So for example, the footnotes, there's 10 major sections we discuss. But within the footnotes, you'll usually find out how much debt is coming due in the next 5 years. You can't see that, man, by just looking at the balance sheet, right? So you got to look at that closely. And this is just one of our products that helps you analyze financial statements. Okay.
And I will say, running it through an AI algorithm, whether it's ChatGPT, whatever you prefer, does help out, because now you can slim out and find those things a lot easier when you know what you're looking for in the prompts.
Yeah. Excellent. Okay, Alexandra, who has great questions, is saying, is the Rothschild family really rich? Yeah. Generational wealth. Yeah. Are there actually really rich families, way more than mentioned on the internet? Absolutely. You wrote, you guys have been deep in the finance industry. That's why I asked. Absolutely. Yeah. And so what I recommend reading is this book. There's 2 books I want to recommend. Okay. And really rich people live below their means. The first book I want you guys to read, okay, is The Wealthy Barber. And it's about a barber that's a multimillionaire because he lives below his means. The next book I want you all to read, this will change everything for you, savings-wise, is called The Millionaire Next Door. So you want to be cheap and live below your means. That's why a lot of rich people you work for are cheap. And by the way, quick side note, if you get screwed on your bonus in the first year working at a company for some rich schmuck, one data point makes a trend. Move on to something else. Or heck, start your own company. These people are rich for a reason. Now, one of the ways that these families create generational wealth is they own a lot of real estate. It's the best investment you can make. My grandfather, God bless him, who's up in heaven with my little sister who passed away last summer, Katie. I love you. I miss you so much. My grandfather used to always say, Chrissy, buy land. They're not making it anymore.
Also jewelry and art.
Yeah.
A lot of people don't give jewelry and art enough credit.
Yeah.
But if you look at very wealthy families who have, over the years, they always had a massive collection of art. It is one of the best. And I think art has outperformed real estate by a long. But everyone's different. It's all risky. You do your own research. But jewelry, just diamonds and gold. Look at the price of gold. Those things you don't think about, the stuff you bought your wife, the engagement ring or the wedding ring. Well, 200 years ago, they were doing the same thing. Rolex.
Yeah.
Those things will appreciate in value over time if it's good, solid quality. To where buying maybe an Apple iWatch, I love my Apple Watch, but let's be honest, in 2 to 3 years it's dead. It's garbage. It's just a dead battery. It's not going to be worth any, except maybe the first one, like the first iPod. It'll have some form of remembrance. But long-term wise, just don't think about real estate. Think about art and jewelry, little things like that. Wealthy families have massive collections of these.
No, absolutely. And Brian actually owns Picasso, Salvador Dali's, and all that stuff too. He owns Spider-Man #1 in mint condition, all that stuff. And Brian also brought me, I mentioned this at the beginning of the webcast. So I love Wolverine because he's Canadian. Did you know that? He's Canadian.
Yes.
Yeah, he's one of my people. Okay. All right. All right. You guys have Batman and Robin, but who cares? They're nothing special. So what he did was, I don't know if you guys read the Wolverine comics limited edition back in the 80s, but he knows the author and the drawer.
Artist.
Sorry, I don't speak good.
Oh, I know the author. I know both, but
Frank
this
Miller
came from
stuff, yeah.
this came from the artist.
This is the guy that did the art, and Brian had him make this for me, and then write a very nice note in the back that said to Chris Haroun, thanks for teaching Brian how to make money. That is so cool. Thank you. I appreciate that, and thank you for being here as well. Yeah, yeah. But one more thing I want to say about real estate, really important, is it's my dream that all of my clients within 10 to 15 years make more money from their real estate investment properties than they do from their base salary. The richest families in America, like the Rothschilds, et cetera, they have one thing in common. They own a ton of real estate, right? And I remember back in the 2016 televised debate between Hillary Clinton and Donald Trump. Hillary Clinton said, it's not fair, you're not paying taxes and all that stuff. And then Trump said, well, of course, I own property. I can use depreciation. And the great thing about depreciation, and here's an income statement, I love using props, is this is revenue, this is net income. If you use a lot of depreciation for real estate, right, and it can't work for your primary residence, but it can for investment properties like commercial and residential real estate you own, you can depreciate. And the good thing about that is it makes your taxes much, much lower. Okay, so really, really rich people pay less in taxes percent-wise than a lot of us do. It's not fair, but it is what it is. And so the product I have, which is available to all my customers that sign up my website, exclusively available on my website, is the complete real estate course, where I teach you all about this, whether you want to buy your primary residence, residential investment rental, commercial investment rental, property, etc. I help you to select the property to buy as well. And I also help you value it based on 5 different valuation methodologies before you buy. I teach you about mortgages and all that crap, which they don't teach you in school, which is moronic. Income statement, your cash flow statement for the property you want to buy, as well as all the formulas that matter. And then what happens is at the end, you get a 1-page write-up. And Brian used this to buy his house recently. And you also get a very comprehensive business plan. Works in every country in the world, including this house, which I own. You can search for it if you want. I own a bunch of houses in Canada and all over. You can print this out, yeah. And you always want to do a write-up on any investment you want to make, as well as a business plan. And of course, I have that template available for you. Fail in the plan is plan to fail. Yeah.
And just having access to all that information in the palm of your hand is brilliant. I mean, you do have to take time to fill it out and do the research, but once you've done, you feel so good about what you're doing. Yeah. You feel like you know more than the underwriters and the mortgage lenders when you're ready to close on the house, because you have everything figured out. So.
Yeah, and you will understand. Thank you for that plug. Okay, all right. Sorry, it was awful humor. Yeah, okay, let's move on here. Sorry. All right, next question is, and we're not going to be able to answer all questions. I apologize, but for those of you in my premium products, my 3-hour and 20-minute Zoom meeting starts in about 13 minutes. So if you have questions, you'll get to ask me there as well. All right. All right, so let me move on here. Jimmy wrote, hey, Chris, hey. I'm a Platinum MBA. Awesome. Thank you. And if you want to watch the webcast for Saturday's event and the workshop I'm doing as well, please email support@harounventures.com. And then my staff will send you a link. Thank you. Okay. And then you wrote, from your experience, is E3-1 better for product or services in terms of Venture Capital Bootcamp? Yeah. And so what Brian, what Jimmy is referring to is E3-1 is Entrepreneurship Semester 3 class number 1. Is it good for starting a services-based company or a product-based company? So,
I can actually answer this one because I've gone through it myself.
Sure.
So the Venture Bootcamp and what you're talking about here on E3-1, if I remember correctly, is when I decided I wanted to open a comic book store. And once I started filling out all the steps that Chris has here, I realized what I wanted probably wasn't logically a good investment to go into. So it actually had the opposite accountability plan. But once you start filling this out, you're able to figure out the company name, where you register it, how you're going to make money, the location you're going to put it in. The business plan that comes out at the end, you can actually print that out if you want to. I didn't make it all the way to the very end to a final because I realized by the time I was in the middle of it, what I wanted to do wasn't going to work. With the new political climate, people losing their jobs where I live in the Northern Virginia area, it wouldn't make sense to open that business. But I probably wouldn't have known that if I hadn't have done that program right there. I might still want to do another business idea. It just may not be that right now.
Yeah, it's really important to write a business plan. You can use that template if you want to. I provided my clients, or just, I don't know, use ChatGPT or find some other template, other mine if you want. Failing a plan is plan to fail. And the way you know you have a good business plan, at least one that has a higher probability of making money, is if you finish the business plan. Quite often you'll start a business plan like Brian did for a bricks and mortar comic book store, and you'll get, I don't know, like an hour into it, answering a lot of questions. You teach yourself, you come to a conclusion that, hey, this is not a good business model, so you move on.
Yeah, and I spent about 30 days on it, so a little bit more than an hour.
Okay.
But what's amazing about the business plan he's designed, there were so many things I didn't even think about. And I own a business, and these are things I didn't think about when I was looking at doing this business. And they're all addressed there. And I like that I could come back to things if I didn't have the information right now. There was a tab that was yes, no, or maybe. And it was easy to look up what I was missing at the time. So I do feel if you're interested in starting a business, it is probably one of the best things out there on the market that'll guide you through the process of doing it, and at least give you the realization whether this is a good idea or not. And it's very truthful. That's the worst part. It is very truthful when you find out whether it's a good or bad idea.
Yeah, that's a good point. Okay, cool. And then next question, Minority Voice. Thank you for that $5 donation. Many of you know the reason I do what I do is because I want to die broke, and I'm building 1,000 schools in Africa that will go directly to charity, which is my wife's name. That was terrible humor. Her name is Christine. I'm kidding. And so in terms of what the schools look like, so we're currently building a school for girls with my students in Kenya. I was there a couple months ago. Former CEO of Udemy is on my board, as well as Jennifer Murphy, the best CMO on the planet from Udemy. The one we finished a couple of years ago was in Rwanda, also with a student of mine. So I pay for all this stuff. You pay for all this stuff. I appreciate everything you guys do. As Nelson Mandela said, education is the most powerful weapon that we can use to change the world. And there's Vital, my student's mother. His father passed away in the genocide. God bless him. Yeah. And we have solar on the roof as well. My mom freaked out when she saw me filming this as well. All self-sustainable, all locally sourced. Yeah. And when it comes to education, Malala had the best quote. She said, with guns, you can kill terrorists, but with education, you can kill terrorism. And so I humbly believe that every problem in the world is a result of lack of education, ignorance. Yeah. And everybody has access to information. It's free online, YouTube, etc. You don't have to buy my stuff. Search YouTube for, a course on this stuff, watch for free. Yeah. That wasn't helping this infomercial, was it?
I wouldn't say it was the best plan.
No, that wasn't good. Okay, so I'm gonna take this money back from you. I'm just kidding. Okay, great. So your question is this, and I would love to get Brian's thoughts on this too. Can you explain buy, borrow, die? When is it appropriate? $1 million portfolio or less? Yeah. So buy, borrow, die. The way it works is you buy assets that are going up, like stocks or real estate, and then instead of selling them and triggering capital gains tax, you actually borrow against them. Okay. And then when you die, when you pass away, the people that inherit the stuff from you, they get what's called a stepped-up basis in order to minimize taxes. Those gains actually are in some cases never taxed at all. You have to talk to a tax lawyer about that first. Don't rely on my advice for that, though, please.
Yeah, and if you're going to attempt to do something like this, so I have a few clients, and there's not a lot I'm allowed to say because of FINRA rules about this, but they became the bank themselves. So they built up their portfolio enough to where if they wanted to go buy a real estate property, they could give me a call and say, Brian, this property is available. I'm just going to write against the account. And they didn't have to sell any of their holdings because they were able to borrow off of the holdings they have. That is what a lot of wealthy people will do. I'm not going to go much further in that. You should probably speak to a financial advisor or somebody that you trust, and they can explain it to you in further detail and let you know how that applies to you. But yes, wealthy people do borrow against themselves, not from banks.
Yeah, and what I will say is, of course, talk to a financial advisor first and a tax lawyer. But what you can also do is this, okay? And please do your research on this. What I'm showing you can be somewhat dangerous. You never just rely on AI, okay? Because AI hallucinates a lot. So I took your question here. And what you want to do is, my financial situation is whatever it is, okay? X, okay? Then I'm pasting your question here. Explain, buy, borrow, die, when is it appropriate, million before or less. And what you want to do in ChatGPT 5 is select deep research, okay? And then you're going to run deep research. If I click this, it takes 20 minutes. It's going to come back and ask me some more questions. So you're going to go here, 1, yes, 2, are you mainly domestic? All, 3, yes. Alexa, stop, okay? Ignore the typos there. And then it takes 20 minutes for deep research to run. Right here, you'll see a status bar. You'll get the answer in about 20 minutes, okay? And again, don't take that for gospel. You always want to do your own investment research. Okay, Brian, I have to go to New York City in the background. I'm so sorry. just for a minute here, because I'm a nerd. Okay, there you go. How cool is that?
I feel like I'm on a news channel.
You are. This is the nightly news.
And why?
And I'm Dan Rather. Yeah. All right. Next question, and I do have to wrap this up in a couple of minutes. Again, if you're a premium customer, if you want to be a premium customer, go to the link in the description. Just set up a call with somebody on my staff. And if you're a premium customer, I've got a 3-hour and 20-minute Zoom call. My weekly Thursday Zoom call starts in 5 minutes. If you're a premium customer, also, you get at least a 1-hour small group Zoom coaching call with me every single weekday. It's over 300 hours per year and 7 hours per week. You also get 10 hours of one-on-ones with me and access to my humbly award-winning courses, 600 hours of my stuff, and all of my courses for free forever. If you want to learn more, go to the link in the description and set up a call with my staff. Okay, let me go down and see. Somebody donated money. Somebody else, I think. Is that the only one? I think so. Let's see if there's any other questions I can answer. I'm going to scan this really quickly, Brian, and find people are asking you questions, okay? All right. So Alexandra wrote, how is the work environment in private wealth management? Yeah. What is the work environment like in PWM?
It's easy for me. I prefer it. It's not as stressful as, let's say, investment banking or VC firms. Especially when you already have the business. Now, building the business, it was extremely stressful. I had to cold call. I had to put myself out there, networking events, building it up. That took many, many years. You were always pulling your hair out. But I will say one of the coolest things I did was I bought a world globe map. I put it on the back wall, and I would throw darts at it, and that's where I would start cold calling. That's how I became very international oriented. And now I get to travel all over the world meeting these clients. And now those clients, because they've been with me for so long, they send me additional clients. So my business has exploded that way. So I would say in the beginning, it's a struggle to build your brand, who you are, and to build the business. I would say the first 5 years, it's unless you come from a very wealthy family and your mom and dad says, okay, here's $5 million to get you started. That wasn't my case or a lot of people's cases. And that's the hard part. But once that part's done with, I control my time, and I can't say this enough. Time is the most valuable commodity in the world. Because I do private wealth management, if I don't want to work that day, I don't work that. I'm here in California, not in Washington, D.C., not because a boss told me, because I wanted to be here. I control what's going on. I think that is the biggest factor when doing private wealth management is being able to control your time. I get to coach my kids' soccer team. I get to coach their basketball team. I run the Boy Scout organization where I live, all because I have the time to do that. If I was investment banking, I don't think I would have had that time, and I would have missed them growing up. So for me, I love the culture. I like where I am today. Do I make as much money as investment banking? Absolutely not even close. But I do well, and I was able to buy a house when I wanted to buy a house. I can buy a car with cash. I don't have to borrow money on it. So I think I'm in a sweet spot, and I'm happy where I am. So I hope that answers that question right there.
I love it. And a lot of my clients, a lot of students say, I want to work in investment banking, and they don't really understand what they're getting themselves into, right? And you might think, oh my God, I'm making way more money than my buddies do. You're not. You're making the same amount per hour, but you're working crazy hours. Your health is going to suffer. And the Dalai Lama once said, the problem with Western society is we sacrifice sacrifice our health. Oh my God, hear my voice?
Yeah.
Sacrifice my health here for all of you because I love you guys. No, no.
The Dalai Lama's coming through you.
He is. He is. The Dalai Lama said the problem with Western society is we sacrifice our health our entire lives to make money. And at the end of our lives, we sacrifice all of our money to maintain our health. And we look back and we realize we never really lived to begin with. So I want to thank you all for your time. Brian, thank you so much for being here.
For having me.
I appreciate it. This was fun. I will see, for those people coming in for the 3-day annual event, I'll see you guys this Saturday. And I'm going to end this webcast with a 1-minute video that will change your life that I licensed. It's from the Silicon Valley Historical Association. It's a brief interview with Steve Jobs. Thank you. God bless.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it, that's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.